This is the NZDCHF short setup that printed me a 3-hour win, and I'm breaking it down step by step so you can steal the blueprint. In this breakdown, I walk you through the exact setup I used to short NZDCHF and hit a clean 3-to-1 ratio. I'll show you what I saw, why I entered, and how I managed to trade the target, so you can spot the same pattern next time it shows up. So as you guys know, I use this trading checklist, which is structure, supply and demand, liquidity, order flow, premium versus discount, and then after that my entry model. So I'm going to walk you through this checklist, show you how it works, and then we can take a look at the entry and the trade itself. So as you can see here on a weekly time frame, we are structure bearish, and then when we traded down lower, we broke structure over here. Then we got a pullback up higher, and where did we get a pullback to? In towards a supply zone. So from this supply, we also got a reaction down lower, and as you can see, it's also close to this blue line, which is the premium prices or the premium versus discount over here. So we can check this off, supply and demand and structure already on the weekly time frame, and also order flow, because what is order flow? A chain of supply and demand zones. So what can we see? Every single time that we have a supply, it pushes price down lower. So we have bearish order flow, and we can just also expect to now also trade down lower. So on the weekly time frame, we have checked off a lot. The only thing that we didn't check off is liquidity, and that should be over here. But as you can see, we do not take any liquidity, but that's something we can maybe check off on the lower time frame. So let's go to the daily and let's see what we have over here. So as you can see, we are daily swing bearish as well, same structure, so also same premium versus discount, and as you can see, we came close to that point, and of course we know it is kind of a zone, so because we already reacted from it previously, we could now also expect to trade down lower. So what can we see? We broke this low over here, so now we are inside a supply zone. Why is that? Because we had a buy breaking this high, and then we had a sell by breaking the low. So what do we then have? A buy before the sell, so we have a supply zone. So from that point we get a reaction up higher, and then we could trade down lower because we have this supply zone that could push price down lower. So looking at liquidity, we still do not have any liquidity, or actually we do. So in this move down lower, you see that we do not have any liquidity, and that's why I pointed this high over here. This is the first liquidity point that we should grab, or I was looking at to grab before trading down lower, to take some liquidity in order to fuel the next move down lower. But that didn't happen. What happened is that we almost stepped this supply zone right at this high, but it missed it by a millipip. So we traded up higher, and then we sold, attracting sellers into the market, and then we swiped them, taking liquidity above the high because there are stop losses above this high because people are shorting. Then we take the stop losses out, then we switch the order flow, so then you could say, okay, we might have grabbed enough liquidity above this high to fuel the next move down lower. And that's what you need to take a look at, looking at the confirmation. What was the confirmation that it was enough liquidity? Well, the breakdown lower, creating supply, because now this supply could push price down lower. So we could also check that off. So we have structure, supply, of course, this is your supply zone, and then after this break over here, we have a new supply zone, that is this one in control. Liquidity taken above this high over here. Order flow, as you can see, clearly bearish because we have those supply zones as a connection pushing price down lower, and premium versus discount is going to be the same as the weekly time frame. So then we go over to the 4-hour, and then as you can see, we're also structure wise, our first thing on our checklist, bearish. And then if we take a look at premium versus discount, we can also check that off because we are inside premium prices, right? We broke structure, we got a pullback in towards premium prices, so now we could say, okay, we can trade down lower and make a new swing low. Then we take a look at supply and demand, we tapped this refined supply zone, and then we made a new supply zone. So at this point, what do we see? We had our first step in towards this supply, and then we got a reaction. So what can we see? We have structure, we have Primavera's discount, we have supply and demand, we also have liquidity with this high that we grabbed over here, and then what you can see, we got a move down lower, but then again we swipe the high one more time, so we 2 times have liquidity also above this high, but that's something I'm going to explain inside the entry model. Then what can we see? Well, the order flow is also bearish, because you can see that every single time that we have a supply zone, we just respect it and trade down lower. Boom, boom, boom. So now from this latest supply zone, we could also expect to trade down lower as well. So let me show the entry model first on the 4 hour, and then we can go over to the 1 hour and 50 minute, because it is a 50-minute setup. So over here you can see that we tap the supply once. So for me, when we take liquidity or tap a supply or demand zone once, this is for me early sellers or buyers. So as you can see, we got an immediate reaction, breaking structure at this low, creating supply zones to push price down lower. But that is not what I'm looking for. What I'm looking for is that these are early sellers, because it's a first step. We then swipe those early sellers, as you can see over here, and then we break structure over here. So this is my confirmation that we now have created a new supply zone and that we now could start to trade down lower. So after that we broke this low, I was looking to take my short setup, because I was certain that we made a strong high. So then inside this supply, I needed to look for a short setup on the lower time frame. If I didn't want to take a lower time frame setup, then this would have been my setup, something like this, with my stop loss above the strong high, of course, my entry on top of the supply, trading for a 1 to 3 down lower. But as you can see, this is pretty low, and I don't know, but it is possible that we could see something like this, right? So that's just the reason why I went over to the 15-minute to take my setup over there, because it's lower risk that your TP will get hit, but sometimes it's necessary to take smaller trades, and that's something I will show you in a second. So we have the supply zone, and as you can see on the 1 hour, this is a clear supply right over here. So what do we then see? This candle over here is something you can ignore. Why? Because it is the dead gap candle. I made a video about it. This is a candle you can ignore. So what do we see? We have some liquidity open at the lows. So mind you, we took a short at this point. So on this point, I woke up and I took the short. I'm going to show you the entry in a second. But why did I take the short? Well, another confluence on the lower time frame is that we have a lot of liquidity open here at the lows. So when I woke up over here and we took some Asia liquidity above this high, it was visible for me that we could now trade down lower, because we also tapped the supply zone. So going over to the 15-minute, this is where the actual setup happened. So as you can see over here, this is also a 50-minute supply that we tapped. And again, you get the same exact thing. We have our first step inside this supply over here with this high. And as I said before, this is something you would like to see getting swiped. Because again, you tap that supply, sellers get into the market, you also break structure. So people think, okay, I'm going to go short. And they place their stop loss above this high. But that doesn't happen. We always, or most of the time, get those early buyers or sellers swipe, and we swipe those, and then once you see your confirmation, you can then go short. So what was my confirmation? First of all, the fractal break. That was my confirmation, and then after the fractal break, which was right at this low, this was my fractal low at point of breaking that high, and then as you can see, we broke the fractal over here, and then this is going to be your new supply in control, going to push price possibly down lower. So why did I take this short over here and not after we broke this low? Reason for that is that we swiped some Asia liquidity, and then we got that fractal break, causing this high to be a strong high. So this was a strong high where I could place my stop loss above, and then we had the 50-minute fractal break, and that's where I put my entry on, because we have the sell, the buy, and then the sell. So this is the buy before the sell. After that fractal break, that's where your entry should be. And then what did I do? I just targeted a 3 risk reward, trading towards all of these liquidity lows. So this was a pretty clean trade. I hope you liked it. I hope you learned a lot, and let's take some trades together next time.